And welcome to a VSA video blog. And I'm delighted today to have the chairman of Pensana Rare Earths, Paul Atherley. Paul, how are you today?
Very well, Andrew. Nice to see you looking well. And so you spent this lockdown period actually locked down in the office. I always accuse you of being on the golf course in Cornwall, but you assure me you've been coming into the office every day.
Well, I have been coming to the office all day, although actually you can probably tell from my face, I did spend last week, after the April the 12th, when you were allowed to, going to my house in Cornwall. It was quite nice weather, and I was on the golf course. So, but look, we're not here to talk about my golf because it's a terrible subject. We're actually here to talk about something far, far, far better, which is Pensana Rare Earths, which, you know, I'm delighted to be able to say, you know, we first talked with the VSA blog, video blog like this, probably about 9 months ago, and your share price was 20p. And since then, we've seen some not only actually spectacular share price performance, we've seen real progress in the business as well. And of course, on top of that, I'm sure we'll get to this, we've seen this huge interest come into, you know, rare earths and the need for countries to have security of supply. But the real key is, you know, you've come out now with a full business plan of where you're going. So why don't you just quickly, Paul, talk us through that, and then I'll basically question you on that.
Look, thanks for that. Yes, we put out a business plan the other day, which reflects the fact that we have a very large ore body in Angola, which we talked about all that time ago, and we've looked at developing that, and we found out there's a big demand for the products further downstream. So if you have a mine, any rare earth mine in the world, you can produce a concentrate or you can produce a carbonate, and generally you can sell that to Chinese purchasers for sort of something around less than $10,000 US a ton. In our studies, we found that if we go one step further and build a separation plant, which is what we've just announced, we can sell products in the range of $90,000 a ton to over, if we go to metal, to over $100,000 a ton. So what we're saying to investors is we've made that big step. We made the step to go downstream and to move away from being totally dependent on selling a product to the Chinese market, to one which we actually hope to be able to develop to sell to original equipment manufacturers here in Europe. And this is at a time when the Europe is talking about creating a green economy, and the two centerpieces of the green economy, as you know, are electric vehicles and offshore wind, both of which are totally dependent on rare earth magnets. We talk lots about batteries and battery metals, but all they do is produce electricity. What actually makes a Porsche Taycan faster than Lewis Hamilton's Formula One car, 0 to 60, 2.3 seconds, the Turbo S, is incredibly powerful magnets in the axial motors. And any electric vehicle these days is about 47 magnets. And then the offshore wind turbines, as you know, we've made this step change from onshore to offshore. So suddenly these onshore wind turbines were sort of 1 to 3 megawatts, 50 to 100 meters high, but they're limited by the fact they've got a gearbox. So you basically have to repair the gearbox. You have to get up there and repair the gearbox. They designed a change in the design was to have a direct drive offshore wind turbine. So basically it's a copper coil being rotated inside a very, very large permanent magnet. And that means there's no change in gearbox. It means you can make them as high as you like. So those ones on Dogger Bank that we talked about before, they're 260 meters high. And instead of being 1 to 3 megawatts, they're now 13 to 15 megawatts. And the next ones off the being designed are 20 megawatts and 30 megawatts. So that's all driven by these incredibly powerful permanent magnets. So what we've done is made the step from being a miner, a concentrate producer. The business plan talks about building this facility in Saltend, in the existing chemicals park, to be suppliers to the original equipment manufacturers for the green economy.
I mean, it's quite interesting because you've taken a very unique step over the last 12 months, basically, of as you say, your mine is in Angola, well supported. Obviously, the Angolan Sovereign Wealth Fund supports you, which is a fantastic place to be in. You've moved to have basically the London listing. So you've moved to the UK. You're now building this plant in the UK. As you say, you're going to be supplying these huge offshore wind farms in the North Sea connected to the UK. You suddenly become a very important company for the UK economy and the UK green economy, shall we say? I mean, are you getting plaudits from the government or encouragement from the government? I mean, how are you spending your whole time talking to Boris Johnson, if he will talk to anybody? How's that all playing out?
Unfortunately, I don't have Boris's phone number, so I can't send him any texts, so we don't have direct communications. But yes, we've made that transition from Pensana Rare Earths, which was an Australian company dual listed, and we've now delisted from ASX. We're now Pensana PLC. We actually, UK company, will pay HMRC tax. And as you say, we tick an awful lot of boxes for the current government's policies. So we're Northern Powerhouse. We're in part of this net zero of decarbonising the biggest industrial cluster in the UK, which is the Humber. We're doing very, very interesting work with Equinor on hydrogen, blue hydrogen. And we're, as you say, critically part of the magnet metal supply chain for electric vehicles and offshore wind. And that has attracted UK government interest. And we have announced that we are through the first phase of discussions with the Automotive Transformation Fund. This is £1 billion fund looking at creating this supply chain. And we do enjoy, shall I say, a lot of interest from the UK government, not just for what we're doing in Sultan, but also for what we're doing in Angola. Angola is one of the top destinations for support for the UK government into Africa. Last year, the UK Export Finance did £400 million worth of export guarantees into Angola. So on a number of fronts, we're ticking a lot of boxes, and we're very much trying to be on policy, both in the UK and in Angola, by the way. So Angola is looking to diversify its economy away from oil and gas and diamonds into mining, tourism and agriculture. So you've seen the support. We've had the ongoing support we've had from the Angolan Sovereign Wealth Fund. They've been backing each of the raises that we've done going forward, and we anticipate they'll continue to do that. So we're on policy in Angola and very, very much on policy in the UK.
So, I mean, obviously it is interesting for a mining company to diversify into having their own plant. And, you know, let's just pick up on that slightly, because as you say, that what is happening at the moment in this whole space is happening, number one, very fast, but is becoming very broad. And, you know, we saw recently Johnson Matthey, for instance, say that, you know, they're obviously developing their own ELNO cathode battery, and they decided they need to get security of supply of their metals, which they've done through a series of agreements. So you're sort of on the other side, but do you think this is going to go further with yourselves? And actually, are you being approached by, you know, the big automotive companies and the big wind farm builders to say, look, actually, we want security supply. Can we come please and have a chat with you?
Yes, but on both counts. So just taking the last one first, we've announced that we're in discussion with Equinor. Equinor putting those very large wind turbines in the Dogger Bank. We've talked to them about bringing their nacelles to salt end of life and using hydrogen for a hydrogen decarbonisation process. We're going to do a study to see if we can break down those nacelles, turn them back into the metals for their wind turbines. In other words, creating the circular economy for rare earth metals in the UK. And on the automotive side, we flagged that just one vehicle alone, that's the VW's ID3, ID4 range, that one vehicle alone will consume all of Sultan's production for the next decade. So we've already seen car manufacturers starting to move upstream because they're concerned about the provenance of supply. The EU has made it clear it's no longer acceptable to extract raw materials unsustainably and put them in your Mercedes or BMW, because you want to know that the cobalt in the battery hasn't come from child labor. So to do that, the car manufacturers are seeking certification or even going even further upstream. You've seen it with Tesla into Piedmont Lithium, Tesla with Trafigura with the nickel. So we're seeing lots of that. The next cab off the rank, very much, Andrew, which you're flagging, is those same car manufacturers saying, hey, that's the battery raw materials. What about the rare earths? So we're hoping to be able to provide to them the provenance and the certification life cycle analysis to say, here, you can buy your rare earths to be sure that it complies with the EU carbon border tax mechanism and also your future requirements under the EU sustainable investment taxonomy.
And presumably that's, one of the huge advantages of being vertically integrated is that you keep control of the product, so that you can give that certification. Because if you're sending it off to China to be processed and then bringing it back again, without being rude, who knows what happens? But at least you have complete control over the whole supply chain, and therefore you can say, yes, we know exactly who mined this, where it came from, and here's the certification.
And I think you as a consumer, when you buy your product now, you're much more demanding. You're not willing to accept an automotive vehicle that doesn't have that provenance, and also the electricity power front, they're going to be held to account. So this isn't a China bashing exercise. This is going to be consumer driven and also legislated. You simply won't be able to, just to reiterate that phrase, you won't be able to extract raw materials unsustainably, bring them into Europe and the UK, and put them into the green economy or consumer goods. That's going to end, and we're part of. So what you'll see is, you've seen it with taxation, reshoring, Andrew. You know this, reshoring. No longer to have offshore tax havens. It's a bit what we've done with Pensana. We've created Pensana as a PLC. We're going to pay HMRC tax. Well, it's the same with the processing. We're going to bring the processing to the UK to fit in. We're a postcard from the future. This is where it will be. No longer, I reiterate that same point, no longer acceptable raw materials extracted unsustainably. You have to have a proof of provenance to do that.
And just moving on slightly, we're at the moment, there's a lot of this talk of us being in a new super cycle for commodities. And obviously, everyone tends to talk about copper being the new oil or whatever. How do you see at the moment the future of pricing in the rare earth space? Do you think that will go along with everything else in a super cycle, if we are in a super cycle, or are you actually agnostic to it because you're a low cost producer? Therefore, the price of what the price is, we can make a good margin. How do you feel about all of that, Paul?
So first one on the super cycle, this is my personal view, is I think everyone's talking about the green economy and they're focusing on that. They're kind of missing something else that's happening, and it's huge, and that's urbanization. And the recent Lianhui in China, which is the two governments' plan, the next 12-year plan, they basically come out and said that China's going to put 60% of its 1.4 billion people by 2035 into 9 megacities. And these megacities will have an average population bigger than Germany. And part of it is to do with rebalancing the Chinese economy, which, as you know, is being driven largely by fixed asset investment. That's not sustainable. What they want to do is get consumption going. And if you move somebody off the land from peasant and agrarian background into a city, their consumption increases by 2.3 times. We think that's going to be an absolutely massive driver for electrification of motive power, which is what offshore wind's all about and what electric vehicles are all about. And electrification of motive power, which we would say is the biggest energy transition trend in history, is dependent on just a few magnet metals, rare earths. So the description by Ryan Castillo from Adamus Intelligence was post 2030, the demand for rare earth magnets is unfathomable. They're saying it's off the scale, don't know where supply is going to come from. You're going to need at least 3 Linus corporations coming online. So all of those kind of numbers. So we are not, with the super cycle, fine. Yes, that's driven by urbanization, not so much the green economy. The green economy is focused on a few metals, which but the bigger driver is this shortage that's going to occur. Put it another way around. 98% of the magnets that drive your cars and electric vehicles are supplied from China. 98%. China has just announced it's going to spend $11 trillion on its 2060 carbon neutral plan. And guess what? They're investing in electric vehicles and offshore wind. They won't have any magnets to export.
Well, and that brings me on to a question which I will just literally throw at you and hope you don't fall off your chair. I often get asked, Andrew, why are they called rare earths and why are they so rare? And I go, well, actually, they're not that rare. There's actually a lot of them around. But what is rare is successful projects that are actually being put into production. And you have one of the few in the Western world in that category. and certainly within the UK, you know, you are the premier, shall we say, the top of the Premier League in terms of rare earths. But as you say, there's going to be this massive demand. You've demonstrated you understand the space. You're capable of building a mine and putting it into production. Would you go and acquire another mine? Because there's actually quite a lot of rare earth projects around. It's just that nobody has bothered to go and get them going. So is in your rifle eyepiece, whatever it is, your telescopic sights, do you have another mine?
That's a really good question. We think we're in actually a real super league for miners. There's only Lynas Corporation outside Australia, which is producing the oxides. There is Mountain Pass MP Materials listed on New York Stock Exchange, which is the other one. Lynas has a market cap of around 4 billion, and it's producing the same amount of rare earth oxides that we will. Mountain Pass, I don't know, 6 billion or something. So first of all, we've got a market cap of 300 million pounds, for 450 million US. So we've got a sort of, if you like, a 10 times uplift in value once we get into production from here. But secondly, the barriers to entry for any other rare earth miner to go into separation is very, very high. It's a difficult process. And we have a lot of work to do to build Salt End and commission it. But through that, the other side, you can see the uplift. So what we've said in our announcement is we want to become a rare earth processing hub. So we say to the other rare earth miners, you go and develop your mine. Instead of selling it off cheaply, cheap carbonate off to China, we will buy it off you, or we'll do a deal with you to process at Salt End. And we've already identified areas for expansion of Salt End for that purpose. So in other words, our business plan going forward, and it's stated, is become a rare earth processing hub. And as long as we can source these materials sustainably, then we can bring them into the Salt End processing facility. And then we start off at about 5% of the world's supply in 2023, 2025, in that area. We would then seek to gain further market share. So yes to the super cycle, we get that, but we think the explosive one is clearly rare earths. There's no doubt about it. That's the one that's everyone's looking at. And in terms of developing with other companies, we don't want to own any more mines necessarily. We've got a great one in Angola, but if there are other mines out there, we would love to take their feedstock and put it into our plant and expand our plant.
Okay, so the focus is on the plant, which by the way is totally understandable. Let's just finish off a little bit with your share price, because at the end of the day, that's what investors are obviously interested in. Look, you know, as I say, when we started talking back last August, doing video blogs with you, Paul, you were 20p. You know, you're now 160, 170, whatever, moves around a little bit. But I mean, it's been a fantastic performance. You're up sort of 8 to 10-fold. How do we get the next 10-fold? Now, you just mentioned, you know, getting the plant, getting your mine into production and getting the plant up and running potentially gives you another sort of 10-fold uplift in the share price. It's just in its own right, and that just takes time. But how is the news flow? You know, if I'm saying to somebody today, look, you've got to buy these Pensana, it's fantastic, and they go, Andrew, it's already up 10-fold. What does the news flow look like over the next sort of 6 to 18 months so that investors can go, yep, if I buy it now, I can see the trajectory of why I'm going to make a lot of money?
So 3 steps. 1, over the next few months, we need to finance it. Second step is next year we need to build it, and then the year after we need to commission it. Those 3 steps take us up to the same position that Lynas Corporation is. They're capped at 4 billion, we're capped at 400 million.
That's an incredibly simple answer. I love it, Paul. And I mean, presumably there's a lot of work going on behind the scenes to make sure this all happens, and you clearly you're smiling, you're clearly confident that it'll happen, and we all know it's always a little bit easier said than done. And these
so what we did, Andrew, is, you know, I've stayed fairly quiet, which is unusual for me for nearly 6 months now, and basically we've spent 16 months bringing the company. So what we want to do is come to you and talk to you about, we have our permitting in place, planning permission for Salt End, mining license, construction license for in Angola. We have all our engineering design done. We're at what's called feed stage, front-end engineering design, and we're on the ground. There's stuff happening on the ground. So in other words, we want to come to you locked and loaded, ready to go. What I didn't want to do is come to you and say we're waiting for an approval or waiting for a study to be completed. So we're locked and loaded, and the news flow is all about that action on the ground, the things that you would expect, long lead time items, etc. I don't want to preempt any announcements. And that culminates in the question you would ask me. You say, okay, Paul, sounds great. You now need to fund it. Put the funding in front of shareholders so they can see what it looks like. And I think then that further de-risks it and says, okay, here's the business plan, here's the engineering, and now here's the funding. Now we can give a more accurate financial measure of how we unlock that NPV.
And I mean, actually, and I can answer this question for you to a certain extent to save any embarrassment, but funding at the moment for these sort of projects actually is pretty readily available and on some very attractive terms. I mean, the market conditions, although, you know, obviously it's been very difficult with the pandemic, have created an environment for you to fund this, which is superb, actually, and I suspect you'll get a very good deal.
We're very popular, but as you pointed out at the beginning, the thematic is very strong. Everybody gets the thematic, and they're looking for plays on that thematic. So we, as I said, both for the government and institutional investors, we tick the thematic for them very easily. Rare earth mining is not such a great place for institutional investors to be, that you and I both know. But once you get into processing, it starts to sound like Johnson Matthey, Umicore, Ineos. It starts things that they understand. So we're very much more into that space.
So maybe, look, I mean, it's been a great chat, and there's clearly anybody listening to this, by the way, if you've got further questions, do feel free to contact us at VSA Capital, or I'm sure Paul will happily answer himself. But, you know, I think you very clearly explained why there is still, you know, well, another tenfold to go in the share price, which will be fantastic if it does, and everyone will be very happy. I'll maybe just wrap up with the fact, I remember also going back to that first video blog we did, you very kindly said, look, we must get you down, Andrew, to Angola to see the mine. I guess now you're going to say, actually, Andrew, I'm just going to take you up north to Sultan to see the process plant, which isn't quite so exciting, but it can be done.
Fish and chips in Hull is the best offer we can make at this point. But no, we'd love to get you to both. And no, it's great because you know, in your investors are in this early stage, and they buy a stock at say 20 pence, and it gets this level now. Now we're institutionalizing the story from here. We've got the right board, we're bringing on the right kind of investors, and it has another journey.
And I mean, that again, I'll actually finish twice. Very key point, that you're actually institutional ready now as a company completely. You know, you're at a size and also a state in the industry, and we all know that people are now scratching around saying, how do we get involved in these critical metals, these battery metals? We're seeing people like Sir Mick Davis with his Vision Blue come in and take stakes in things like ferroalloys, which I'm pleased to say as a VSA client as well. We're seeing, you know, I don't know if you saw the other day, TechMet, run by Brian Manell, has just raised another $125 million to do exactly the same thing. We know that Robert Friedland is doing the same thing. You know, there is a lot of money pouring in now, not just to the transitional energy space, and obviously hydrogen got absolutely flooded with it, but actually into your space. So, you know, I think the availability of money is looking very, very positive. So, I mean, you know, look, I think it's great to always catch up with you, Paul. And I'm looking forward already now to my fish and chips in Hull.
Thanks for your time, Andrew. Really appreciate it.
Not at all.